Sandip, but with reason, because this is interesting what Accenture has delivered, what Accenture has said, and it's probably Sandip, I mean, thanks for joining in again. Really appreciate you taking the time out, by the way, and speaking to us. But what did you make of Accenture? Net positive maybe, but or is it a mixed bag? Because it's got, I mean, somehow I thought mixed implications, right? That there is some performance, but there is a caution, there is a currency angle attached to it, and there could well be Accenture-specific reasons why this has happened and may not be applicable to the rest of the IT pack. Opinion is mixed out there. How do you think about it?
Yeah, hi, good morning, and thanks for having me on the show. So I will just keep apart in two parts. One is the Accenture numbers on their own, so they are definitely slightly better than what was anticipated, and the commentary and guidance upgrade do, feed into the optimism. On the other hand, if you see the numbers into greater detail, then there is a consulting piece and the outsourcing piece, and this outsourcing piece or the managed services piece has done slightly better than the consulting piece, which may also be reason because there was impending US election when this quarter was going on. So, most of the clients would have pulled back the discretionary part a little bit, and they may release now with certainty on presidential outcome. So that can play, and that can further aid growth going forward. And Accenture, remember, it is always hard to exactly calculate the organic growth because there is an inorganic component, there is a currency deviation and all those things. But overall, still, if you see the book-to-bill and the booking ratios, they are all looking fantastic. So no doubt there is an uptick in the demand situation. And in my view, next quarter onwards, it will be further improving because consultancy will also now open up. The only challenge is that remember that Indian IT index has moved up by 15% in last 3 months. So a lot of all this optimism has been built in price. So I would say that, good news on fundamentals will keep on coming for next 2, 3, 4 quarters at least. But we don't know how the valuations are pitching. In my view, valuations are little stretched right now. So be very choosy on what you buy.
So that comes straight to my next question, Sandip. When you say be choosy for what you buy, what should you be looking at? Is Wipro, for example, something that you should see good implications for Capco business because of what Accenture has said? Would you look at an LTI Mindtree? Would you look at the top line? What are the filters you would apply?
No, so I would rather say that you should buy companies where valuations are reasonable in the large cap. So there are a couple of names which are reasonably valued. And then if you are going to buy something expensive, buying the sector which will do well in the longer term. So the sector which comes to my mind on that front largely is the E&R&D space where you have all the E&R&D plays. So I will prefer them. But remember, everything is right now very stretched in terms of valuation. So we cannot, just simply buy because there will be time correction and valuation issues which will crop up, or there could be some long time correction which can happen.
The ones which you think are well priced right now. You mentioned that there are some options which are well priced. Which ones are those?
I run a PMS, so it is very hard to call out any name, but let me give you these themes of E&R&D where you have KPIT, Tata Elxsi, LTTS. All this look good from a 5 to 10 year perspective. And in the large cap, there are a couple of names which are more on telecom side and product engineering, which has not done well in last 1 year. So those things can actually do well.
Okay. So look out for the ones which can now do well. But thank you so much for that, Sandip Agarwal there, fund manager and co-founder of Sovilo.